Good afternoon and welcome to our homebuyer seminar. I'm Bill Gross, and along with my good friend and colleague,
Yes, Patricia Castillo.
it's our homebuyer seminar. We do this every Wednesday at 5 o'clock, sometimes 4 o'clock, but 5 o'clock p.m. Pacific time. We record it live and live stream it onto YouTube, Facebook, and LinkedIn. And we talk about all things buying real estate, whether it be your first house or trade up. And Patricia was just commenting to me that interest rates had just fallen
Yeah,
below the magic number of
just under 7%.
I mean, really, when you say just under, it's like
It really is.
they got a crowbar out and just squeezed it down a little bit because it's at 6.99%.
That's right, for a 30-year fixed. And I mean, that's still good news, even if you're getting a different type of loan other than conventional. If you're getting an FHA loan, you're going to be somewhere in the low sixes, which is great.
Yeah, below that.
Exactly. Yeah, this is a good news here. I know we were kind of watching to see which direction, if they were going to hold steady at 7.5. The Feds had said they weren't going to necessarily reduce rates anytime soon, but they were also not going to continue to increase. So the fact that they just fell right below 7% is a step in the right direction.
Well, I do think it gets attention, right? The news covers that, and people see it. This creates. So I don't know that
Mhm.
to be precise, I don't know that the actual difference of 7.0 6.99 is even recognizable to a consumer or an agent. It will create more publicity. Now, if you're a buyer, that might be bad news because it might be other buyers who get the news. Wow, honey, rates are below 7%. Let's go and buy a house. Now you have more competitors, right? So
Exactly. Well,
how
anything
does
that's in the, at least have a percentage, that's going to trigger some buyers because they may have been right on the cusp of getting pre-qualified and have a percentage over may knock them out of the qualification.
right? I mean, I think the bigger number is it's come down from almost 7.5. Uh, in the last 2 weeks, it's been a big, significant 0.5% drop. That's real money, real competition as well.
Mm-hmm.
So, and those watching live, I see people live streaming now on YouTube. And how you guys doing? Feel free to say hi, and feel free to put comments. We're watching this live. We'll respond if it's a compliment from me. I'll read it out loud or put it on the screen. If it's a criticism, I'll skip over it. If it's a question, we'll try to answer it. Whether it's a compliment or criticism of Patricia, I'll put that on either way. So again,
That's
I'm
right.
only sensitive to my own comments. So one of the things that I see in hey, Shannon the lender's here.
How's it going, guys?
He dropped in.
Yeah, and
Yes.
now is he the lender? Like there's no other lender but Shannon? Is that how it works?
Yes. That's. No, I'm joking.
Yeah. Okay. No, that's okay. I'm with that. So, seems to me the kind of the general feel of the news, which is totally made up and accurate, but this is what people see, is that the economy was not as robust as they want it to be. We have an election coming up. And so there was a lot of push to keep rates down or lower rates even a little bit. And then somehow this will stimulate. Anything with lower rates, things are cheaper, people can maybe buy more. But this seems like a pretty fine point. Do you see any kind of change? Are there any buyers have called you up and said, hey, now we're below 7, I'm ready to go? I mean, I don't think it really translates into activity that directly, does it?
Well, not immediately. I mean, I have buyers that I'm working with that if anything, it's just more icing on the cake for them as far as they were already pre-qualified and now they may be able to save some money every month if they do lock in at that rate. Because the other thing to look at is the rate may be lower today, but unless you're locked in, that's the rate that you're going to get. If you're not locked in and you're still looking at homes and let's say you lock in another 2 weeks, the rates might go back up again, right? So it really depends on when you're actually locking in.
That's the key. The only rate that matters is the one you get at the end of the day, right?
That's right.
And so there's different strategies on how to lock in, when to lock in, and that's where it comes up. Um, So, Shannon, what do you see? The rates dropped below 7%, not a big jump in a couple of days, but whatever, emotionally significant, but a 0.5% drop here over the last few weeks. What do you see as changes, if any?
No, I mean, honestly, this is good news. Like Patricia said, I mean, some people, have in retrospect, they could, qualify for more. But again, me personally as a lender, I'm not, going back to all my pre-quals and telling them that you qualify for more, because that 0.5 point drop, that quarter drop could go just as quickly as it went down. It can go up by the time you open escrow. I did, however, have one person that we locked in yesterday that, the rates did drop, and I just told them, hey, let's lock now. We don't know where things are going to go. And a lot of buyers right now, especially with the rates, they're really capped out at that monthly payment. I'm seeing a lot of hesitancy with people like, man, I can barely make that payment. That payment's a little high, but obviously we're telling them you can probably get a good deal right now. So yeah, if Patricia, I think I is 100% on point, which is, yes, the rates did drop down. This is actually, a really good sign. However, if you're not in escrow on a property today, that might not be your case. If you, let's say, what happens next week, so if you're shopping around, I would highly suggest just mentally prepare yourself. You know what I mean? And don't get overly excited. A lot of people are, jumping the gun when it comes to these rates and say, what do I qualify for today? But it doesn't matter until, and this is for anyone out there who's looking to buy a house, whatever rate I quote you or another lender quotes you that day could be different from when you're in escrow. So just know you don't lock in your rate 100% until you open escrow with the property that you're going to get. So have that buffer for yourself. Let's say if they go up a quarter, if they go down a quarter, at least prepare for the worst and hope for the best. Because I'd hate for someone to, say, oh, well, rates are 6.5, or I got a 6.625. And, when they get an escrow, it's a different situation. So
that door swings both ways. I mean, I have 2 escrows that I went into escrow last week or 10 days ago. But both of the offers had been out 2 or 2.5 weeks ago when rates were generally in the 7.5s. And by the time we accepted it, it came down a bit. And now both are up at a point where they can waive contingencies and move to closing.
nice.
And they went from 7.5 possibly to, if they're lucky now, at 7%. So on a $500,000 loan, they could stand to save about $2,500 a year for the life of that loan, not the house, the loan, but that could be on average 7 years. So you're talking about saving $2,500 a year is 200 something bucks a month. You can buy some nice stuff for $200 a month. It's paid for through that savings. But you, to your point, you don't get that benefit unless you've been shopping, got into escrow, had already been pre-approved, ready to lock your loan in now. They're the ones who are benefiting from that, the ones who did the work and prepared when it was slower because the rates were higher, and now they benefit more than people who were in the market last 6 months.
Yeah, and I would second that, Bill. Like he's saying, if rates drop today, that benefits people that have been doing the work, got pre-approved, talked to their agent, already sent out offers, and are ready to go now. If you saw this news that rates dropped a little bit and you're starting today to get pre-qualified, that might not be the case for you. So all the more reason, if you're thinking about buying, execute now, find out what you qualify for now, talk to an agent now, because you could benefit from things like this when they come down the road. Now, I will say, I'm getting now on my side, I don't know if about you guys, but you probably don't hear this too much, but I'm now getting buyers that are more willing to float the rate now during escrow because of this news. They're saying, well, I'm willing to roll the dice. So let's, I already got to people that said, well, I don't want to lock today. I'd rather float it, quote unquote. And what floating means for those buyers that don't know is when you're in escrow on a property, you can lock that rate. Whatever today's rate is, if you go into escrow today, you can lock the rate. Floating means you don't want to lock the rate, and it pretty much, whatever the rate is, every single day, you have an opportunity to lock it or float it, meaning hey, leave it up in the air all the way up until, right before we get docs to lock it. So I am getting certain people that, who are a little bit more risk takers that say, hey, let's float the rate and see what happens. So,
That reminds me, Shannon, of I was just looking for airfare. I was going to buy airline tickets, and you can click on the little icon that says you can watch the airfare, right? So you can track the prices. Are they going up? Are they going down? So I ended up buying my tickets, and today I had a notification that said the price increased. So I said, okay, good, good that I locked in my airfare yesterday. But I think
Hold on now. Hold on. You bought the tickets. They offered to say, we're going to show you what happened after you bought. And you said yes, like we have nothing else to do but watch the price of tickets.
no, I went ahead. Well, I had already been watching the rates on the airfare, so I went ahead and bought my tickets. But
right, you bought them.
I bought them, but I was still getting the notification.
Why?
It was still coming in. I have to unsubscribe, I guess. It's still coming in, letting me know that the airfare went up. I guess it's to let me know that I should feel good that I bought my tickets in advance.
So maybe it's a fake notification. Just make you feel good.
That's right. That's right. But I think for buyers, it's important to know the whole lock-in scenario, right? So when you're going to lock in your rate, there's a time frame for that. You can do a 30-day, a 45-day, but there's also cost involved if you're going to be extending it. So that's important to know ahead of time, because there are some sellers that are selling their property, and the seller is contingent because they're buying a replacement property, right? So they're buying another home that they're going to move to. So in that case, you can't close escrow until the seller is ready to close escrow and they have found their replacement property, and now they're opening escrow on their purchase. So that's that's something to pay attention to and talk to the lender on to see when you're going to lock in your rate, especially if you're purchasing a property where the seller is contingent on finding a replacement property.
Hey, by the way, this show's gotten much upgraded on the production value. We have graphics appropriate to the topics now. We're not just fooling around. So if you're going to talk about whether you want to talk about gambling on rates like this, or locking in rates like this, we have graphics to help you understand what we're talking about, because this isn't just some homemade podcast. This is like the real deal. We got some real players here. Hey, Angela McLeod, visual of the show, had a comment in our YouTube. Let's put that up real quick. To the lender, this is to you, Shannon. Once an escrow, you lock the rate. If during escrow the rate drops, can the buyer not take advantage of the lower rate? Great question, Angela.
Yeah. So once you're in escrow, and if you lock the rate, it's locked pretty much, meaning that good or it's the pro is if the rates go up, you're not affected by that. The con is the rates go down, you can't take advantage of that. Now you can buy down your rate, whatever the price was at the day you locked. So that is one thing you can do. So pretty much, let's say if you locked and the base rate was 6.7, let's just give it a number, right? And you wanted to buy it down to 6.5. Well, the price of that day you locked will pretty much be the same price throughout the whole time of escrow until like Patricia says, that lock rate expires. But yeah, that there's pros and cons to locking. The pro is if rates go up, you're not affected. And the con is if rates go down, you're not going to be able to take advantage because you're locked in. Now, I have seen people that said, okay, well, I want to go, since the rates are down, I want to go with another bank or something like that. So there are certain scenarios like that where you could kind of play with it. But yeah, locking the rate essentially means you're freezing it. And that is what it is, good, bad, or ugly, or, so.
But the rates also change just slightly, right? So if you're in escrow and you lock your rate today, you may see a slight, dip in the rates, let's say in a week or something like that. It's not going to be a huge difference. You might see, an eighth of a point. It's not going to be drastic. Rates don't drop that quickly.
Yeah. I think if you're not payment sensitive, you can roll the dice. I have had clients, I'm not going to lie. I've had clients because I'm always a proponent of let's just lock today. I don't want you to get any more surprises, because there's a lot of surprises when escrow and you're in real estate. The last surprise I want you to have is, hey, I know I quoted you on this payment, but rates went up. And now this is what it is. On top of, you have to deal with property inspections, you have to deal with appraisals, you have to deal with all this paperwork. There's so many things that you're going to have to mentally go through when you're in escrow. The last thing I want you to worry about is, where's my rate and where's my payment? Because I've had that a lot. But if you're not that rate sensitive or payment sensitive, and you said, hey, I can afford to take that gamble. I've had clients that they took the gamble, rates dropped like they did today, and boom, you know what I mean? They locked. So it's just, what kind of person are you? Or is the monthly payment that you're getting quoted the day you open escrow, is that your highest and best, and you can't afford to go any higher than that? If that is your case, which, most people I deal with, the rates are already high as it is, they want to just, be in something secure, I say lock it. But if you're like, you know what, I do want to take this gamble, I see some news that maybe, in my opinion, I think they're going to dip again or dip once or twice, then yeah, you could definitely float that rate. But going back to Angela's question, that's a great question. If you lock the rate, you're freezing it, and that is what it is. So yeah, it depends on what you want to do.
So I'm going to add a little color to this. Shannon is a lender. And so, when he sends a loan to a bank or a lender, he has some restrictions and some business practices and relationships. As a real estate agent, I do have, relations with lenders. And at the same time, I have a fiduciary interest. I have a legal obligation to serve my client. Generally, rates don't change that much, which is worth changing lenders midstream, because usually you have a time element involved that if you don't close on time, you're going to get penalized. And also, changing lenders requires appraisal up front, and so you're betting money up front. But I've been in this business since 1986. There have been times when rates dropped tremendously. And for a buyer to possibly save 0.5% on a loan, $25 to $250 a month for 5-7 years, that's a lot of money. And so, and again, I don't want to say this to in any way disparage Shannon or the lenders he works with, but I will say that there have been times where I've had customers who had their paperwork together, they could jump on another loan and either get another loan somewhere else or get a concession from the lender. And in some cases, some like Shannon either has to sharpen his pencil like we do as realtors sometimes on our commission. Sometimes he gets the lender he gave the loan to sharpen their pencil and make some sort of concession, because when that happens, there have been times where the whole market dropped 1.5%. And those lenders are facing a lot of buyers threatening to change lenders midstream. So I would say to buyers, my best advice always is, if you can afford the payment, lock in when you open escrow. If you have a 60-day escrow or less, for sure, a 45-day escrow 100%, 30-day escrow or less 100%, as long as you can meet the deadlines, because that ensures you in case of a catastrophic increase in rates. If there's a catastrophic decrease in rates, catastrophic in terms of the economy, not just a buyer, there's been occasions where buyers have benefited from that. And again, nobody wants to hurt anybody's business, but at the same time, we have responsibility to our customers too. So I hope it comes across as, hey, let's not just stick it out, because I think sometimes buyers want to drop lenders for an 1/8% of a rate. And in that case, they run the risk of not getting the house. And at the end of the day, it doesn't matter what the rate is if you don't get the house. And also, I want to say one last point is, the value that Shannon plays with us and his customers is not just the rate at the close, it's getting the house. And sometimes the other lender can't close on time, they're not going to get you the house. And so that's where, just because you go online and a lending tree, but it's a well, I have to be a little careful. I know some people at Loan Depot, there's good and there's bad. Bank of America, you call it Bank of America's call center. Who knows what's going to happen? So again, it's a great question, Angela, and it's one that I think all buyers should have a conversation with their agent, with a mortgage officer, as well as their real estate agent. In these times, it's relatively insignificant, but there are times when it can be. And I think if you're sitting here listening to this saying, hey, I'd want to lower the rate if it went down 0.5%, then I would say to you, well, yeah, but what if it went up 0.5%? How would you feel? That's why you should get your paperwork done. That's why you should get locked in. That's why you should clear your contingencies and I'd hold up the close.
Yeah, and you know what, Bill? On that note, and I don't like to promote this too much, but the good thing about me being a loan broker is I'm approved with over 35 banks. So in the event where, yes, if there's something catastrophic like a 1%, drop in rates, I could submit it to another bank that has that rate. Obviously it's going to affect my relationship a little bit, right, with the current bank that I'm submitting it with. But the good thing is hey, I have more than one option. So if that, like you said, if that case does come up, we could submit it somewhere else, and I have all the paperwork. Let's just submit it to this other bank that pretty much has a very similar rate, or like I said, even better rate. It has today's rates. Let's submit it with them and let's just move forward. Right. That's not always again, I don't like to just promote that on everything, but
Right.
if that is a situation I've done it before. Right. And I just tell my account executive at that bank, look, unfortunately, they've chose to go somewhere else, and I have to just smooth that over. But Bill's 100% right. You gotta, even if
What was that? I'm sorry to hear that part. Bill is what?
He's right. You know what? If you're
No. You said right. You said something else.
Correct.
You said 100% right.
100%. Yeah.
Okay. I think you got that on tape.
100%. So
I'm going to play that tape for my wife, by the way. That's why I had you repeat that. Go ahead.
Okay, got it. I'll say Bill is 100% right.
Oh, I love that. Say that one more time. I just can't get enough.
He's just going to clip this part and make a reel out of it.
So,
well, there's a repeat. Just repeat. Bill's 100% right. Bill's 100% right. That's fantastic.
That's hilarious. But I say that to say that, look, if you have having a good team means that they have your best interest at heart. And for me, no matter what, even if it's, hey, I've had situations where this client, they want to qualify, and then they say, well, in order for them to get this deal done, they need to go with them. You know what? Totally fine. Not fine, but you know what? At the end of the day, Bill's right. I want you to get the house, and if that means whatever that means, if you have a good team, they want what's best for you.
Yeah.
So if it's, hey, if I have to submit this to a whole nother bank and I got to start this whole process over again to get you that rate, I'll do it. If that means that person has to qualify or they have to do whatever they have to do, let's do it. At the end of the day, I'm here. And like you said, we have a license, and our license, each one of our licenses means that we have a fiduciary agreement to you, that end consumer. So yeah. So there are times as a loan broker, hey, I have relationships with many banks. So if that means we have to submit it to somewhere else because the rate is just that good, we locked here, so we got to go here. Hey, let's get it done.
And that's one of the good things about being a mortgage broker is that you are approved with different, what you say, 30 or 35 different banks.
Yeah, over 35.
Different lenders. So if it's not working out with one lender, there's options.
I've been on conference calls as a lender where management told us when rates jumped up a lot to nitpick every loan we could to get those locks that were in the money for the buyer off our books. I've submitted loans, I've been around a little longer than you have, Shannon, to Wells Fargo, Bank of America, back before they went bankrupt and reappeared with taxpayer money as Bank of America and Chase and Citicorp and Wells Fargo the last time around, those companies. And it had them renege on approvals when the market was falling apart in 2008, 2009. And so I think the thing that I would say is it's a business. And at the end of the day, we have integrity, we have contractual obligations, and we have responsibility to our customers. And sometimes there's some balances, and sometimes there's some conflicts we have to work out. But at the end of the day, we have to serve our customers. And I think that's why most good lenders like Shannon don't work for a bank, because when you work for a bank, you're stuck. Rates go down, they're not going to let you renegotiate that deal, most likely. And when you're a mortgage broker, within reason, you have some options. Again, we can't. What's the term? Sheep get fleeced, but pigs get slaughtered. And so we want to take advantage of our vendor relationships, but at the same time, we have a business to perform. We have customers to make happy. And so Angela adds another fine point to this. Again, great questions, Angela. So you lock with a loan, the rate goes down, they bring another lender in the mix because the rate drop, does everything start over again, such as inspections? I think the inspection, the answer is no, but appraisal, the answer is maybe yes, maybe no. Can you answer that for us, Shannon?
Yeah, that's a great question. So Angela, if you were to lock a rate with another lender and go to either another bank or another lender, The real estate process, meaning the inspection, pretty much the home inspection, those disclosures that you find, you don't have to start that over again. On the loan side, you do have to start over your loan disclosures. You do have to, sign those things over again. The appraisal is 50-50, because you can do what's called an appraisal transfer if the new bank that you're working with has that appraiser as on their approved lender list. So, every bank has a list of approved appraisers. If they have that, appraiser that you just did the appraisal for, if they have it on their list as well, and they're okay with it, and it's just within a reasonable amount of time, usually you can get that appraisal transferred and you can save some of your money that way. And that's something that I also look out for too. If I'm submitting your file from one bank to another, would you also transfer this appraisal over? So it's much easier on conventional. Obviously on FHA, you have an FHA case number that, you have to deal with when you're doing FHA, and that's a little bit cumbersome. But to answer your question, you don't have to start the whole entire escrow process over again. You do have to start the lending process, those lending disclosures, the loan estimate, all that over again. And then as far as the appraisal, it's a 50-50, depending on which bank you go to, depending on how far the appraisal is, you may have to pay for another appraisal, you may not. It just all depends on the new bank that you're going with and the appraisal that you got.
Yeah, and I good points. And I will add to that, on the real estate purchase agreement, the default is 17 days for appraisal and for the loan contingencies to be removed. So let's say you were a few days into it and into the contract date, and you decided to go with a different lender, then that time is still ticking, right? The 17 days. So you would, if let's say the new lender said they're going to need more time, then your agent can also renegotiate the 17-day term if needed and get an extension to remove those contingencies.
Well, on that topic, though, that's where having a great real estate agent can save you. So, for example, I've had literally cases where either the lender took longer than we needed for whatever the reason was, or we're changing lenders or whatever it was, and we had a deadline. And then my job is to make the seller live to the exacting detailed letter of the contract. And so what happens is oftentimes sellers will be late with their disclosures. And they'll say, oh, well, your lending day is up at 17 days. We want to cancel the escrow. And I say, well, no. You never gave me this form. And then they'll take 2 or 3 days to give me that form back and say, okay, your 17 days is up, and we gave you the form. And I'll say, oh, but you left out this form. And I've literally had realtors say to me, can you just tell me everything that we're missing up front so I can get it all to you at once? And I would say, no, my whole goal here is to drag us as long as possible. My buyer needs extra time. There was a property in Rancho Park where I went against one of the top real estate agents in Southern California. And I mean, he would be yelling at me and cussing at me, but my job was to get my buyer enough time, because in that case, he was self-employed. It was a complicated loan, needed some time for something to get done. And we got it. And the guy tried to kick us out 3 or 4 times. And he just was screaming, can't you just tell me everything we're missing at once? I said, of course I'm not going to. My job is not to make your job easier. My job is to protect my buyer. And so, again, if you're a buyer in the situation, that's why you want to work with a great realtor like Patricia or me. As Shen said, I'm always right. So there you go.
100%.
100% right. Okay. So, okay. Angela says, thank you. Angela, a colleague of ours at XP, thank you for jumping in with the great questions, and love your participation. Okay. Hey, we're kind of up against the time slot here. Last parting words, Shannon. Rates jumped down here to below 7% officially on the Fannie Mae limit, Fannie Mae report. What's your advice for buyers looking to buy a house this week?
Great question. If rates have dropped, that's very true. My 2 messages for buyers out there is, 1, again, this is a great tone for the rest of the year. Let's see what the rest of the year brings and be very excited about real estate. Number 2, good and bad news, rates have dropped down. So if you're thinking about buying, start now, because you're not going to be able to take advantage of this until you get fully pre-qualified. You're with an agent and you're in the position to already submit offers and get that offer accepted. So if you're watching this right now and you see rates drop, this is your sign. You need to call. either one of us or you're professional and get started now.
I love that.
Good.
Patricia, what's your advice or final words here?
Preparation. Preparation is key. So, along with what Shannon, the lender, just said, if you're out looking at homes just to look because it's a Sunday afternoon and you're just passing the time and you're not really serious about buying a house, well, that's fine. You don't have to take that step. But if you are thinking of buying a home and you're contemplating maybe in the next 6 months, 3 months, this is still the time to start preparing. So it's good to see what's out there, go to open houses, see what kind of activity you're facing, as far as competition. But the best thing to do is to be prepared. And that would mean to start getting that blueprint ready, which is what we help you with.
Very nice. Okay, well, there you go. And thanks to our producers today. We have a high production value of very fancy graphics to help us understand what we're talking about today. Thanks, Andrew, for being on the call today. Some great questions and direction. Shannon, the lender, always appreciate you. Patricia, always great to see you. Appreciate you squeeze us in between listing property. I'm Bill Gross at Bill Gross Probate. Have a great week. We'll see you guys next Wednesday, 5 p.m. Thank you so much.
Bye.
Yes.